Welcome to Shortview Trading. This is your morning market hit for Thursday, the 6th of February. What matters today for traders? Well, US markets have been remarkably strong in the last few trading sessions, with this wave 2 relief rally really playing out quite aggressively. The Nasdaq and the S&P both making new intraday and closing highs. In the S&P's case, only just, but over the past 24 hours, both of those doing that. And indeed, in the center of the sort of coronavirus outbreak over in Asia and China, those markets have been retracing significant amounts of their losses in their wave 1 pullback. Both the Shanghai Composite and the Hang Seng retracing around about 40-50% of those losses from wave 1. With those moves higher, we've seen a lot of our short-term models move quite rapidly. Indeed, the fund flows model is one of the most dramatic. Having been on buy not many trading sessions ago, it's now back on sell. This is US fund flows into S&P, Nasdaq and Russell ETFs. It's also the case that risk appetites move rapidly from buy back towards sell, with some of our key risk appetite models now pretty close to that sell threshold. Put to call ratios remain at high levels and on or close to sell, and technical models have moved up pretty rapidly and also now quite close to sell. But of course, at the center of this strength in recent trading sessions has been the tech stocks in the US. Tesla is of course the poster child for that strength. The chart you see in front of you now shows the extraordinary rally in this stock in recent weeks and recent days, with such considerable give back. Just yesterday, the stock giving back about 20%. But it's not just Tesla, it's Apple, Microsoft, Amazon, and a number of other tech stocks where you see that sort of classic short squeeze in the last few trading sessions, whereby the price goes somewhat vertical. Whilst clearly in the US this has been a mild sell-off and now is arguably done, elsewhere in the world there's every chance you get a wave 3. I'm thinking of Asia in particular, where you're retracing about the sort of Fibonacci type levels of your wave 1 losses. But equally, where there was real strength in wave 1 and where there wasn't a pullback in certain asset prices around the world is often an area of weakness if there is a wave 3. As our models move back towards sell, a wave 3 seems increasingly likely. And if we're correct, therefore, one of the best ways to play a short position is places where the most strength has been. That is the tech sector. For the full detail on how we're playing this market, please see today's Daily Rag, available to subscribers and on the website. So what are we watching today? Well, to be honest, it's pretty light. In terms of key macro, it's US productivity, which generally doesn't move markets. In terms of key events, it's Fed's Kaplan is speaking, might be interesting. He's speaking about the economic outlook. And also we've got the ECB's Villeroy, and earlier today we've had Lagarde. And then finally, of course, it's earnings continuing, but it's all quite light second-tier names. That was your morning market hit for Thursday, February the 6th. Please do subscribe on YouTube, LinkedIn, Facebook, and or Twitter. Thank you.